Hi, and welcome to this week's episode of the CostofCarry podcast. My name is James Chi. Let's get started. Getting an alternate documentation loan. As we all know, all borrowers have different circumstances, and that's why there is never a one-size-fits-all approach when it comes to lending. For the majority of full-time employees with a good credit history, you'll likely have a range of options and be able to look at a regular home loan from your standard home loan provider. However, to access a regular home loan, you might need maybe 3 payslips or 2 years of annual tax returns, but generally speaking, regular home loans are a lot more stringent, and that's why we see more regular home loans with low interest rates like you do on TV. Unfortunately, for the self-employed and business owners out there, it's not always possible to present 2 years worth of tax returns or pay slips. And for these types of borrowers, there are other avenues to getting finance for a home loan, one of which is by providing alternative documentations, which is alt-doc lending. Lenders that offer alt-doc lending or alt-doc loans will normally require a combination of three types of information. The first being 6 months worth of business bank statements, the last 2 quarters of business activity statements or BAS, and lastly, an accountant's declaration. Given the borrower's income is not as black and white as PAYG employees, interest rates will normally be higher, and while there might also be higher loan application fees and setup costs, this is the price or the cost of not having that concrete tax return evidence, income evidence. It's important to note that just because you might be self-employed or a business owner, you don't automatically need to go for an alt-doc loan. If you're able to produce the 2 years worth of tax returns and business accounts and financials, and you have good credit history, then you should be able to qualify for a regular home loan at a lower interest rate. However, if your business has recently seen a large increase in revenue and you want to access a larger loan, then it might be worth looking at an alt-doc loan. Similarly, if you've had credit issues in the past that you've been unable to turn around, then an alt-doc loan might work for you. There are also a few myths out there surrounding alt-doc loans. The main one is that you can get a home loan with no documentation at all. Those days are long gone, and you will need to be able to provide or prove that you have the means to service the repayments. The second myth is that the big banks don't take on these types of loans, or the major banks in particular. In many instances, the major banks are able to look at lending to people without the full documentation, given they have the size, diversity, and track record to handle those different amounts of risk. Once again, the key is to talk to a mortgage broker who can quickly understand your personal circumstances and match you with the right solution for your needs. And that concludes this episode of the CostofCarry podcast. Thank you all for tuning in, and I'll see you in the next episode.